Hi everybody, and welcome to another episode of KammaKast. Today we are very lucky to have an extremely interesting guest from the Climate Bonds Initiative. Matteo Bigoni is a Head of Taxonomies from the Climate Bonds Initiative and has an extremely interesting background working across a number of countries and sectors on climate-related issues, and has found himself working in present day on a really important initiative, I think, in my opinion, for how the whole to a circle for sorting out the climate crisis is going to work, particularly in terms of driving private institutional investment towards the right areas to ensure that actually we do meet our targets for net zero, to ensure that we can stop this increase in temperature. So I'll let Matteo tell us a little bit about himself. I would love to hear more about your background and what drove you to choose a career path, because it looks like you were kind of ahead of the game, kind of choosing to work on these kind of initiatives quite a while ago, and how you found yourself working with the Climate Bonds Initiative.
Sure. Hi, Orla, and hello, everybody. And thank you very much for the opportunity. And I started working in climate something like 15 years ago. And for me, it was very clear. So I was raised in a farm back in Italy. And, to me, the environment has always been very important and it's always been there. And so I've always wanted to actually focus on climate. I didn't really know in the beginning. I knew that I wanted to be something in relation to the environment. But 15 years ago, things were a bit different. So there were lots of people, even within my peers. And at the time, I was in my early 20s, very early 20s, that basically didn't believe in climate change, or they thought that it was a hoax, orchestrated by China in order for people not to drive their cars or something. So something ridiculous like that, which is something that's still
those people still exist, unfortunately.
Oh, they still do. Yes, exactly. I was going to say, but at the time it was very prominent, mostly for two reasons. One, because there weren't as many career opportunities, and climate finance was science fiction at the time, and also because the science wasn't really that robust at the time. I mean, we knew it was going to happen, but there wasn't as much evidence as we have now, and there wasn't as much conviction, I would say, from market stakeholders or even from scientists. Remember that the science of climate change is still quite nebulous, and parts we still don't have a clear picture. And projections in the future are still a bit nebulous. So we know it's going to happen, but the severity of it, for instance, is we have a broad option, sort of a range of options, I would say, that can basically define climate science and what climate change would look like in 15, 20 years. And at the time, it was even worse. And so, people didn't really believe in it. Lots of stakeholders didn't believe in it. But I knew, because I studied science in school, in high school. So to me, the science was very clear back then. And I knew we were going to head towards catastrophe. And we still are. So things have not really changed that much, unfortunately. And so that's why I started so early. And I wrote my dissertation on China around 2005, 2006. And the reason is because at the time, China had just joined the WTO. They joined in the year 2000, 2001. And so it was really the epicenter of climate. It was growing exponentially. The risk of a climate disaster was really tangible at the time. And so I moved to China. Soon after my dissertation, I wanted to really get my hands dirty, and I worked for a consultancy there for a while whilst I was writing my dissertation on carbon markets, focusing on China. But then I only lasted for something like a year and a half, because I didn't speak Chinese, though I tried to study Chinese with dubious results, but I did speak French. And so I was offered a position with an NGO in West Africa, in Dakar. And so I had this intercontinental move from Beijing to Dakar in Senegal, which was a bit of a cultural shock, I have to say. And I focused on, but also extremely interesting. And, I was young and naive and I loved it. And I focused on access to clean energy for women in impoverished communities in Africa, specifically in Dakar, in Senegal, but also in Zambia. And really, the Senegal is located in the Sahel region, which is basically a region where, it's a transition, climatically is a transition region. The north is the desert and the south is the rainforest. And this very small strip of land called the Sahel, there's a transition climate. And transition climates are even more susceptible to climate change because they are in that small sort of range of sort of climatic characteristics that can change very quickly and disappear very quickly. The Mediterranean climate is also quite similar to that. And so there's the desert really advancing quite quickly from the north, and rain patterns are changing very quickly, and compounding the extreme poverty level of the country. You could see why people there are struggling from an economic, but mostly an environmental perspective. I worked a lot with women's organizations in rural Africa, and you could really see the impact of the climate and the climate crisis there in terms not just access to energy, but also the provision of food, where there's food shortages and lack of access to water. Wells become saturated with salt. There's really little access to energy, not just electricity, but access to energy in terms of what they can cook with. There's environmental degradation, biodiversity loss, soil depletion, etc. And so it really opened my eyes as to why it's really important to not just address climate change, but also to have a sustainable way of production of living as well, because ultimately it's us, the people, and us as a race, as a society, that we just really depend on it. And it's really, to me, it was I can actually visualize where the moment sort of clicked in my brain, in my head, when I was studying environmental economics. A professor from Cambridge, I can't remember his name, but he basically said, we are the ones depending on nature. Nature doesn't depend on us. Nature will survive this one way or another. We might not. So really, who are we doing this for? Ultimately, it's for us. It's for our well-being. And so I thought, before heading back to Europe and having an office job, which I kind of have now, I thought I'd just get my hands dirty and learn from experience. Yeah.
Have you, I know that's quite a while ago now, I guess it's nearly 15 plus years ago.
Well, I left Senegal in 2014, so I guess it was less than 8 years ago. Yeah.
Okay, so not that. So almost 10 years ago. Do you still kind of follow Senegal's progress? Has there been a marked deterioration, or has there been improvements because of initiatives like what you were involved with?
No, I think it's probably deteriorated. There's probably less access. It's polarized, I would say. I think that Dakar as a city has improved in terms of quality of life, but I think that rural areas are probably more impoverished, and there's more urgency in terms of addressing the climate crisis. Because remember, I mean, we've literally, over the last, I would say, 5-6 years, it's really spiraled out of control. The effects, I mean, I live in London, and we really had a Mediterranean summer last year. It would have been unthinkable 10 years ago. So, the pace of change is quite dramatic.
It's quite scary because I'm obviously Irish, in case anyone doesn't realize that from my name and my accent, but I still tune into Irish radio, even though I live in London. And the biggest topic of conversation at the moment is there's a huge shortage of fresh fruit and vegetables imported from Spain at the moment, because I think it's been unseasonably cold for very long periods of time this winter in Spain. So, it's like it is starting to affect Western world food chains as well. Like we can't deny that these things are happening, and that they will.
Right.
Okay, we may, as Western world dwellers, it will be our children and our children's children that will have to deal with what the poor people of Dakar and Senegal and indeed many other places have to deal with now. So
there's a lot of people there that really rely on their own agriculture, growing their food. So, if there's, bad weather because it doesn't rain, then it's not that it can go to the supermarket and, have a variety of different, fruits and vegetables.
A substitute.
No.
Yeah, exactly.
So, yeah.
So take us to present day and tell us a little bit more about how you got involved with the Climate Bonds Initiative and exactly a lot more about the Climate Bonds Initiative, because I feel like it's such an important stimulus in what we're trying to achieve with finance and
Sure,
climate change.
definitely. I mean, to me, I before I was working with grants and relatively small projects, and so the scale of change required wasn't really sufficient. It wasn't really responding to the scale of the problem. And so when I applied for a job at the Climate Bonds Initiative, I thought it would be a good opportunity to mobilize large quantity of money, large amounts of money that could be sort of channeled towards building the type of infrastructure that we need in order to comply with a 2050 net zero carbon future. That's the ultimate goal of the organization. So to mobilize capital markets, so to really get money flowing towards where it's needed. And we're not talking about millions, we're talking about trillions. And so, it's that kind of investment that we need. And that kind of money is only in the hands of institutional investors or capital markets, if you know what I mean. Even beyond, government money, it's really institutional investors that hold the key to the mobilization of capital, the flow of capital towards climate solutions. And so I really wanted to sort of be part of that movement. And climate finance, where I started working at CBI, was in 2016. So even when I started, climate finance wasn't really a thing. And we're talking about massive quantity of big amounts of money being shifted now. But at the time, it was really minuscule still. And so I thought it'd be really good, a very good idea, but also a very good way of sort of being practical. So being able to mobilize large amounts of money very quickly, and so responding to the climate emergency. And so I really enjoyed it, and I think it's still something that we need, even though the green bond market or the sustainable bond market has grown exponentially. It's still a fraction of what it needs to be in order for us to be able to build that 2050 net zero carbon future. So there's still tons of work to be done. Even now we have more tools, more ideas, and it's a lot more mainstream, but still a lot to be done. Yeah, for sure.
So. Yeah, definitely. And your role in particular really interests me because Kamma creates environmental profiles for properties and buildings across entire territories, and we use that data in lots of different ways. And one of the ways which we use it is to be able to kind of provide climate credentials for bonds, particularly property-backed securitizations, for example, so mortgage-backed securities. And it's a topic of much debate whether what the right taxonomy should be, because this is such a new and evolving market that you have to start somewhere. So it's kind of using the tools that you have, but like, where are we now, and what should we evolve to if we're kind of to truly make this a big international market where green premiums can be realized. So tell me a little bit more about and kind of what you think the future holds for taxonomies.
Sure. Yeah. I mean, for going back to, I guess, mortgage-backed securities. So the way we do it with the standard is that this underlying structure of the bond or the underlying structure of the security is really not important. What's really important, I mean, any type of security can be, packaged up and, been included in a bond. So the underlying structure of the bond is not key. Any type of bond can be issued as green, can be labeled rather as green. Yeah. What's really important is the underlying project and assets. In this case, the credentials, the green credentials, the climate credentials of the underlying project and assets. For securities, for mortgages, it would be the climate credentials of the properties, so the actual buildings. So if you have a portfolio of properties, of residential properties, it's the green characteristic, climate characteristics of those properties that really matter for the standard. So the climate bond standards has sector criteria, and the sector criteria really are science-based description of what the underlying project and assets would look like in a 2050 net zero carbon future. So for you to be able to certify a bond under the standard, you need to look at the climate credentials of the projects that you want to fund, to finance or refinance. And so for mortgages, it would be the level of emissions of the underlying properties. So the houses, the buildings that you're financing or refinancing. And so the problem that we have is how to access that data. That is a massive problem. There's really sort of, I don't know, I wouldn't say hindered, but, created problems for bonds linked to the property market, because for us to be able to assess the climate credentials of a building, especially of a residential property, you need to basically have consumption data of the property. In other words, you need to have access to the meters of electricity and gas meters of the property. And that is information that is not widely available at all. In fact, it's illegal to disclose that information because of privacy laws, which are really stringent in Europe. And so that's really, access to data is a massive problem for the property market, for green property bonds, for green bonds linked to properties, because you can't really assess the green credentials of the underlying project and assets of the properties. And issuers don't have that data. If you don't have that data, then how can you issue a green bond based on mortgages? You don't know the green credentials of the buildings.
That's a really good point. We've actually we came across that problem, obviously because of GDPR. You need consent for.
That's right, exactly, precisely. Because if you look at if you're my bill comes from my utility company, right? So it's the utilities companies that have that information because they have access to my meters, but they can't disclose that information to banks. And generally what banks do is they have to finance or refinance their portfolio of mortgages, right? And so they typically issue green bonds for buildings. But if they can't match the building itself with the data and the energy consumption, and hence the greenhouse gas emissions of that property, they can't really assess the green credentials at all. And so they can't issue the bond. There's nothing they can do about it.
Yeah, we actually innovated around that problem, as in that it's hard to have a solution where you're dependent on consumers to give you consent. So as a geospatial technology company, what we've been actually able to do is tap into the national grid and take real-time carbon intensity factors that we can geolocate down to a property level. So we can give a very accurate carbon footprint for a property based on the grid carbon intensity factors and the size and attributes of that property. So that's actually allowed us work with issuing banks to provide what that carbon footprint is. And I think it is so important because energy efficiency ratings have been kind of quoted in the past as kind of the next best thing in terms of a taxonomy, that you could say something is,
well, the proxies, by definition, they're the proxies, because we can't access the data, so we have to circumvent that problem and come up with a proxy, which is, it's not accurate. Sometimes they're not accurate. No. Definitely the EPC rating system in Europe is not accurate. So
no, that's one of the things that we've kind of focused in on as a data company, in that it's a good place to start, but there's lots of inaccuracies with it. So we try and fill in the blanks with other data sources like the carbon intensity factors. It's also, the other issue with it is, of course, that you could have a very energy efficient house that's actually burning quite a lot of fossil fuels. So you're kind of not particularly fulfilling it, doing what a green bond should do.
No, there's no real correlation between energy efficiency and greenhouse gas emissions. So the fact that you have a 50% reduction in energy efficiency doesn't mean that there's a 50% cut in greenhouse gas emissions at all.
Exactly.
So the only way to actually do it is look at consumption patterns and extrapolate them to greenhouse gas emissions from there.
And I think as well, it's quite important from a international point of view, because here in Europe we have energy efficiency ratings, but they don't have that in the United States or China. So carbon is the international language that we need to speak in this
the benchmark,
industry.
The lingua franca, for sure. And also, if you look at the EPC system, it varies from country to country. So it's not a uniform way of assessing the methodology just varies quite drastically. So
it does.
I mean, I think that there are best practice examples in the world, such as Australia, where, lots of green bonds in the property market actually rely on greenhouse gas emissions, because the privacy laws in Australia are not as as intense as they are in Europe. Yeah, exactly. So that data is actually widely available. So
Interesting.
Yeah, that helps.
I think, I don't know what your opinion on this is as well, but one of the reasons I quite like the idea of green securitizations are they don't necessarily have to be green. So one of the ones that we provided climate credentials for, it wouldn't have qualified as green because there wasn't enough kind of properties that would qualify as green, but like quite a large proportion of them did. But what the institutional investors liked was that we were able to show a trajectory to net zero. So a cost and a time frame for how this pool of assets can get to net zero, which I think is really important because particularly when you've got old housing stocks like here in the UK, we really need to upgrade those and we really need to provide the incentive to upgrade those. But there isn't actually enough properties that are low carbon for there to be enough green bonds. So it actually has to be more about this bond. I quite like the idea that finance can be raised on a pool of assets based on its relativity, its relative greenness, and its capability to get to where it needs to be. And then the use of those proceeds can actually go into the financing of retrofit on those properties as well. So it's kind of like the perfect green bond virtuous circle, and the banks should in theory be rewarded with better cost of funds, so a greenium on their cost of funds, which then can be passed on in the financing of this retrofit. I don't love that idea, but we're not quite there yet, but I think that's in my kind of vision for the future for this market and how it can be really helpful in getting us to where we need to be. I think that would be a key thing.
Yeah, for sure. Definitely. I mean, the so-called greenium, the price differential between a normal vanilla bond and a green bond, it's something that is quite, I would say, controversial in the sense that, there's a huge chunk of the market that believes that the greenium is really needed for this. And the greenium that we've seen at the moment it does exist, but you can't really say there's 20 basis points price differential between green bonds and vanilla bonds. You can't really say that because the greenium really depends on market condition, depends on many things, but mostly on market conditions, and depends on many other factors. So you can't really standardize it for the market. It's really something that is specific to the issuer sometimes, and it's you can't really say it because at the moment, whilst the green bond market has grown exponentially, it's still a fraction of the overall bond market. So I'm not talking about just green bonds, I'm talking about or sustainable bonds, I'm talking about the overall bond market in general. And so sometimes it's really difficult to have a statistically significant sort of price differential between the green bond and the normal vanilla bond. But I think you also have to remember that we've so far lived in an era where interest rates were quite depressed. So investors didn't really see difference in terms of risk between assets, investable assets. And I do think that now the interest rates have gone up and will probably go up for the next few months, if not years. Investors will start to discriminate between more riskier assets and safer assets. And I do think that they will see green assets as safer. And so that price differential, that greenium, is probably going to grow over the next few years. But we'll see. This is my theory. And, I think the other side of the coin is that the absence of the greenium also means that green bonds have become mainstream, and so there's no real need for a price differential anymore. You label a bond as green not just because of the greenium. There are a variety of different reasons why you want to label a bond as green. It could be a strategic decision for you. It could be you want to send a signal to investors and to the market saying that you want to align your corporate strategy with a 2050 net zero carbon future or a transition strategy, because you see that your company needs that strategy, because you want to send them that sort of strategic sort of vision of you as an issuer that really want to incorporate climate in the operations of the company, and so investors will see you as more robust. So there's this sort of what we call halo effect, meaning that once you issue a green bond, and the greenium that you found in your green issuance also rubs off onto your vanilla issuances, because it's not just about a one-off. Investors want to see a strategy around how you are decarbonizing as an organization, as an issue, or are you rather integrating climate considerations into your strategy. And so this is why if you issue a bond and you label it as green, then it's got positive impacts on your other issuances as well, because it's more of a strategic decision. Can't just issue a green bond as as that. You need to have a green strategy, a climate strategy, who deals with that. The boards needs to be on board. You need to collect data. You need to have processes to collect data and report the data. So it's not something that you can do on the spot. And again, the problem of data, without access to the data, the processing of the information internally within the issuer, I mean, it's critical. It's a key critical component of the process. Yeah.
Yeah, yeah, certainly probably one of the biggest gripes that we hear from our financial services clients, and it's a gripe for me as well, because I do think it is holding the industry back, is that the greenium doesn't really, it's not really materializing for issuers yet. And I just wonder, is there something around educating institutional investors, as is that a big piece that's missing? Because certainly a lot of the initiatives that we have in climate change, we've had to educate a lot. We're still educating for different markets, because this is also new, and not everybody is aware of the risks of climate change that are particular to them and their market. And certainly where an institutional investor is concerned, where property is concerned as well, there is new laws and regulations that will be coming into effect that actually does introduce a risk on a pool of assets. So but I do feel like they're not all aware that there was a couple of years ago, before the kind of market really slowed down last year, green bonds were quite hip, and there was, Larry Fink from BlackRock was coming out every other week talking about how great it is, and he's kind of backpedaled a little bit on that now. I'm not sure why, but I do feel like there's a huge place for education, a role for education to really stimulate this, because really money talks. So if you can make the cost of money a lot cheaper for anything that's green, I think couple that with public sector funding and public sector initiatives, then I think we really have a lot of momentum behind getting to net zero in time.
Sure. Yeah, I think that's part of the solution. I don't think that the greenium is the key in the game, to be honest. I think that it's inevitable whether the greenium exists or doesn't exist. I think that investors have more and more a mandate to invest into green projects and assets, into green bonds. So you see a lot of coalition of green investors popping up and gaining momentum, but there's a lot more awareness with investors of why they need to channel their resources towards net zero. Multi-development banks and finance corporations have started to integrate green and climate strategies into their corporate strategies. And so I think it's just more of a question of time, of whether, all investors will be green. So this is what I was saying earlier on, that maybe one reason is because, green bonds are not as niche as they are. And so investors see it as more as a common thing that exists in the market, as a common and permanent feature of the market. So, it could also be that. It could be that now it's kind of become to invest or default into green. So that kind of discrimination is not as sharp as it was before. But I do think that the differentiation in interest rates will make a huge difference going forward.
That's not something actually I had thought about, so that makes an awful lot of sense. And maybe it's more about a brown discount than a green premium, than looking at it from that perspective.
Possibly.
And do you believe data has a big role to play? I know greenwashing is always something that's kind of synonymous with anytime you're talking about climate credentials. What do you think? There's a long way to go where data is concerned, and how key is it to us achieving what we need to achieve?
It's key. Data is key. We need data, and because if you want to build a 2050 net zero carbon future, you need to know what kind of infrastructure to build. If you don't have the data to base that assumption on, then what we're going to do? And so, I think for banks specifically is the processing of information. So let me rephrase it. So when you go to the bank and you want to own or a mortgage, generally they ask you for a financial assessment, right? So they go in and say, well, how robust are you? But can I actually trust you? Will you give me the money back? That's what the bank will do. But they don't really. So they collect that data. They collect the data in terms of your financial feasibility as a borrower, but they don't ask you anything in relation to how green the project and assets that you want to finance are. So a massive problem for banks is that there isn't that chain of custody within the bank itself, how to collect the data from the borrower, but also how to process that data. And then for green bonds, how to process that data so that you can issue a green bond. So I'll give you an example. If you want to get a mortgage, the bank should ask you about the EPC rating. And why don't they ask you for your electricity and gas consumption bills, so that they could start sort of building the database internally, so that it can then eventually issue mortgage-backed security. That thought doesn't exist. There isn't. One of the big problems with bonds, green bonds, is that if you're a bank, you're a financial institution, and you issue a bond, it's really difficult for you sometimes to report around the performance of the projects that you're finance or refinance, because internally you don't have the data, you don't track the data, you don't store it, and you don't process it. We need that kind of data. We need processes and structures within financial institutions, within companies in general, that can basically support the issuance of green bonds, but also inform the strategic direction of the organization or of the company towards mobilizing more green projects and assets. But without that data, you can't make that strategic decision.
Absolutely. Being able to set the strategy in the first place, but also then being able to benchmark if you actually are making progress. Because how do we know if we're getting closer?
That's right.
If we can't track that. Oh, absolutely fascinating. I could talk to you all day, Matteo. I do have one final question. I'm really I'm kind of fascinated to see just how much progress the Climate Bonds Initiative has made in such a short space of time. It's been quite a big impact to how capital markets works, and kind of weaving this into kind of, as I say, hopefully it'll be just the default and the norm that bonds are kind of by default green bonds. What's next for Climate Bonds Initiatives? Is there what's going to be happening over the next 5 to 10 years?
Oh dear, there's so much work that needs to
Big
be
question.
done. Oh God, there's transition. The Climate Bonds Initiative was one of the first organizations to deal with transition, how to deal with transition bonds, but also sustainability-linked bonds. Also, we have a transition program, which is one of our core programs, and we're looking at building adaptation and resilience. So to have an adaptation and resilience program, and more recently biodiversity. So it's all interlinked. I wouldn't say that they're all separate. It's a separate work stream, but they're all linked, and there's lots of overlap amongst all of them. But you see that obviously we have the climate change is not just a climate crisis, it's also a biodiversity crisis. It's an infrastructure crisis, and ecosystem crisis. It's a social crisis. So we're looking at developing like an attack sort of strategy from multiple fronts, not just in terms of green bonds and green bonds per se, but also transition bonds, biodiversity bonds, and how to sort of link all of this together to make sure that all different angles are covered, because climate is not just about greenhouse gas emission reductions, thinking about adaptation and resilience. Having lived in Africa for a long time, I mean, adaptation and resilience is really key there. There's, that kind of population sort of risk being, a risk of extreme severe weather events. It's only going to increase, and we need to make sure that they have the right tools and the right investment opportunities and the right infrastructure to be able to deal with an increasing severity, climatic severity. And it's something that, I don't think that capital markets they have yet to realize the investment opportunities into adaptation and resilience, because the sea level is a very small portion of the overall green bond market. So we're looking at boosting that, and at the same time looking at how we can address the biodiversity crisis via capital markets. So really interesting work.
I love the idea of a biodiversity bond. Can you give me an example of what that would be?
Well, there was an exchange of, well, the textbook example is the Rhino bond. I can't remember what it was, but it was an organization looking to tap capital markets to get access to, investor money to basically conservation efforts, conservation projects to preserve rhinos, to protect rhinos from poaching. Another one was the biodiversity bond for Seychelles, sovereign bond. So that was a swap. So you as an investor, you invest into basically a blue bond. Seychelles issued a blue bond. And so essentially the use of proceeds was used by the government of Seychelles to basically protect the marine reserves and increase marine conservation efforts. And so, yeah, it's the different types of sort of conservation bond. Biodiversity bond could be specifically for finance or refinance asset nature-based solutions. So a variety of different assets. Could be reforestation, it could be sustainable agriculture, it could be biodiversity protection, species protection specifically. So yeah, anything you want.
Yeah, very, very broad. But yeah, fascinating. Matteo, it's been fascinating talking to you. As I said, I could talk all day. And actually, I hope maybe we'll get you back at a later date for an update. I think what you're doing is really important work. And actually, as we kind of work our way through this recession, I feel like especially the latter half of this year, I think a lot of markets will be picking up, and it'll be just interesting to see, because we're that much closer to 2030, where there's been a lot of commitments made, there's a lot of laws that will be coming into effect in that period. So I kind of expect to see a big bump in activity in the green bonds space. So I'd love to keep in touch and kind of monitor progress in that way. But thank you for sharing your really inspiring and interesting story and career so far. And we look forward to watching this space.
Thank you.
Thanks.